Hey everybody, how's it going? This is Danielle. Today you are joining my live stream, which is going to be a copy of the Simpler Trading Mastering the Trade Room. I do the trading room 3 times a week. Let me go ahead and get that broadcast started. I'll post the link in the chat below if you want to join the trading room. Hey, this is Danielle. How's everyone doing today? My bank account can't live without her. Ah, that's funny. I'm so glad. I miss you guys too. Sorry, I was so close to getting the Simpler Trading API alert set up. I've been working on that for like the last hour and I was like this close and I was trying to get it working before this session. Um I I think I got it working, not fully sure, but effectively I'm going to New York on Wednesday. I'm going to New York on Wednesday, and I wanted to make sure that all of my, alerts are gonna be sent out automatically whenever I do something in my trading account, and I was hoping I could test it during this session, so I apologize for the delay. Anyways, how's everyone doing today? Can you test it out prior? Yeah, that's what I'm hopefully, going to do is I was gonna try to test it out right now. So, let me go ahead and start off by taking some requests. Yeah, I was hopefully gonna find some trades that I could alert out. Iron, Google. Yes, yes, we'll definitely go over those. I think overall the market, I think we're starting off pretty well coming into Monday. We're coming into Monday with a gap up that ended up holding. Not only did the gap hold, but we also had high volume buying at the open. So that right there is a great sign. Yeah, we've kinda, petered out the last few hours, and we haven't seen a ton of action, but I feel like this is very normal trade overall, especially when it comes to a major earnings week. We have seen incoming volume as far as the vol spread is concerned. We've also seen the put call ratio continuing to climb higher, so that's a good sign. We don't want the put call ratio to be too low going into earnings. Um if you look at the VIX, what you will notice here is that the VIX was climbing lower throughout the vast majority of the session. So that's a good sign. So pretty much everything with the market internals, I mean, I would say that they're still hanging on to the bullish side. We haven't seen a ton of buying here, at least buying that has been consistent over the course of the past couple hours. But we also haven't seen a ton of selling either. We have seen the ticks come down into the negative 600, negative 800 range, but they haven't stayed there. So that's a good sign. When you look at the NASDAQ on the daily chart, you can see that the NASDAQ did have a pretty decent wick and a pretty decent move lower during the overnight session. But, we've had buyers step in and the price is almost up above the 50 simple now. The NASDAQ is up 0.87% today, so not bad. And then we also have a daily squeeze setting up here. So that daily squeeze has been setting up and been in play for quite some time. If you look at the lower time frame charts, what you will see here is that there was that nice high volume buying first thing at the open, and it's just kind of petering out. So, anyways, I think that most everything, especially today, likely just has to do with digesting over the weekend. We've had some pretty crazy moves in metals. Um, we're also digesting the Fed and the news there. But ultimately, I think we're just going to get back to looking at the earnings calendar. So I'm going to get my new watch list set up for this week as far as earnings is concerned. Um, and I think one of the most important ones that is going to be reporting this week is going to be AMD. So definitely want to cover that one. Also, Google, Amazon, those are going to be really critical. These are just important names that are reporting this week that are definitely going to have some market movement. We have PLTR. Let's see, TER. That was a critical name. So let me just go ahead and add those to the list. For me, as far as just getting started on a Monday, it's really all about making an earnings list, making the calendar. Uh, definitely want to check on the current positions that I have. I'm pretty light on my positions right now just because it is the middle of earnings season and because I'm traveling this week. But even if I wasn't traveling this week, I would still be pretty light on swing trades just because we have a situation where the market can move quite a bit due to these earnings reports. So we always want to come into the week with an understanding of what tickers are reporting earnings and how that can impact the overall market. And most importantly, how it could impact um, just different swing positions that we have on. So just flipping through this earnings calendar on stock charts, we have multiple companies that are reporting tomorrow. I'm going and just making a list on the other monitor that you can't see right now because I have 5 monitors that I use to do this work. But I will go ahead and share the full list with you when I'm done with it. So far, what I have is PLTR, TER, Amazon, AMD, CMG, Mondelez, MRK, Match, Pepsi, PFE, SMCI, SWKS, TTWO, and Uber. And those are all just between today and tomorrow. So that's going to be some pretty substantial market moving, guys. So I'll make sure that I cover those throughout the course of the session. I'll finish the watch list for the rest of the week as well. Let me just go over silver and gold quickly, and then I'll go ahead and get to the requests. So starting off with silver, like I was saying last week, I mean, I was trying to go online and buy some silver on Friday when this thing was down 30%, and there was just no way to do it. Pretty much every bullion provider that I located on the internet was sold out, severely delayed. The only way that you could come in and buy something like this was effectively if you bought some of those unique coins. Like I was looking at, for example, coins with specific NFL teams on them and stuff like that. But of course, those are going to be at a pretty high premium, anyways. So even when silver crashed like 30% on Friday and the spot price was down to $80, $90 a piece, those coins were still going for $160, which is just crazy. And, I'm not going to pay for that. So, um, when you're looking at this right here, is it a good buying opportunity? I think the only way you could really do it would probably just be through the ETF, just because it's seems pretty impossible to get your hands on the physical right now. But if you are interested in coming in and trying to buy the silver crash, just picking up shares in the SLV ETF makes sense to me. Anytime you have, like a 20-30% pullback, that's going to be an opportunity to come in and buy the dip. If you look at gold, gold also experienced a pretty significant pullback here. And if you check it out on the daily chart, you can see that it pulled all the way back to the 50 simple, but that's also where it bounced. So again, not very easy to pick up the physical right now. But if you wanted to invest in this by using the ETF, you can look at just buying shares of GLD. So I think that one looks pretty good down on the 34 EMA at $431 a pop. So let me just go ahead and see um, what the requests are that I have today. So Google is looking really good, and Google's reporting earnings later this week on the 4th. So this is going to be the day that I'm traveling, so I'm not going to be able to trade any earnings reports that day because I'm going to be on the airplane all day, going from Washington State to New York City. So, but I can tell you right now, I probably wouldn't trade this one anyways, just because of a couple different situations. So, first of all, Google, definitely one of the strongest NASDAQ names. I like it a lot. The last 3 quarters, it has gapped up and it's done really well after earnings. Um, but the issue here is that when you have a stock that's at a new all-time high and it has gapped up 3 quarters in a row after earnings, the expectations are going to be really high for this stock. So they're going to have to beat their EPS estimates, beat their revenue estimates. And the most important part here is going to be guidance, because as we saw with Microsoft getting trashed after earnings, if they have any mention of slowing growth or reducing their guidance, that's not going to be helpful for this name. So, going into earnings with this stock, yeah, I'm bullish Google. I own the shares. I like it. Do I want to go long at a new all-time high right before an earnings report? No. So that leaves you a little bit limited with what you can actually do with the stock. Could you just sell some neutral iron flies to sell some premium and then buy that premium back the next day? That is a strategy that I usually do. However, you have to understand that every earning season is a little bit different and the tone is going to shift. And so far, what we've seen from earning season, specifically with these tech names, is that we've had some pretty big moves. This was an outsized move with Microsoft. It's extremely rare for this company to have a move to this extent. Historically, Microsoft would only move like 2-3% and selling put credit spreads and selling neutral iron flies every quarter was something that I always did because it was a relatively easy trade. However, that has changed. Over the last 2 years, what we've seen is some pretty significant volatility in this name. We did have these two really big moves, 9.1% up, 8.2% up, but that was the top, and that's where Microsoft reversed. So, heading into Google, um, after seeing just these massive moves from Meta and Microsoft, I can't really say that I'm all that interested in selling some neutral iron flies on Google. And then because I don't really want to buy it because it's at a high, can't really do that. And then that leaves you with, okay, so do you want to short it? And it's like, well, no, I don't want to short it because it's one of the strongest stocks in the NASDAQ. Why would I do that? So I'm not a counter trend trader like that. So I think with Google, the best thing to do is just going to be watch this earnings report, see how the market reacts. Fingers crossed that they can knock it out of the park again and that this thing can continue carrying the market higher. I would love nothing more than to see that happen. But if it does, in fact, pull back, just keep in mind that because we're at that new high, a pullback down into 315, 320 would be okay. Um, cannot really complain about a move back down into the 50 simple. And, as long as it's not destroyed, utter destruction like Microsoft. Um, let's take a look at Amazon. So Amazon is not as consistent of a stock over earnings, is what I generally like to see, just because we do have a couple quarters here. We had 3 different quarters where this name gapped down. And the gaps weren't that small either. We had a 7.2% gap here. We had a 2.7% gap here. We had a 9.4% gap here. Um, but when you look at what happened last quarter we had a big gap to the upside, 12.2%. Overall, I'm bullish on Amazon. I like the company. I own the shares. I think continuing to buy the shares makes sense. I live in Seattle. Well, I don't live in Seattle. I live outside of Seattle, and um, they have announced a bunch of layoffs recently over the weekend um, that are impacting people in the area. This is definitely a big Amazon headquarter. There's a big Amazon headquarters around here. Typically, when you see that, that can help the stock price, unfortunately, because, of course, it brings down cost basis, right? So, um, when you're looking at what that could do to the stock price, um, just brings down not their cost basis, but their expenses overall. So that could be positive. You also have a situation with Amazon where this was over a holiday quarter. So I don't know. I feel like we're going into the earnings report with some potential bullish catalysts. The company does typically at least beat their EPS estimates. And what's better about this one than Google is that this ticker has pulled back going into earnings. So I would be fine with making some bullish bets on Amazon. Um, Even though I wouldn't wanna do it on Google just because this ticker has pulled back. So it looks like the earnings report on this one is gonna be on the 5th. So that is gonna give us just a couple more days until that company reports earnings, and we'll probably see that move on Friday. So if you're looking at this right here, it's too early to make the actual trade, but I'm thinking probably put credit spreads, maybe a bullish butterfly. We will have to see about that one. I don't know if I'm going to be able to do any earnings trades on this one either because I'm going to be filming for TD Ameritrade Network at the NYSE on Thursday, but we'll see if I have any time to send out any alerts. Um, as far as the market maker move is concerned, we also don't have that number yet, but I will point out that this stock is really close to the previous high. So that typically makes for a really good price target to the upside. Next, you want to look at IREN. So this is one that I added shares into my long-term accounts recently. Ticker has earnings coming up as well on the 5th. So when you're looking at this and what this could mean, let me go ahead and add this to my list. Tickers that are reporting on Thursday. There we go. Okay. So when we're looking at the actual earnings report, the company has missed estimates quite a few times. We've beat estimates twice and missed estimates 6 times in 8 quarters. So, not great. But this is one of those more newer, more volatile names. So it falls under my speculative list. And it's still something that I would bet on to the upside, even though you can see that they're missing because of the overall pattern and because of the shift in the trend. So you can see right here, this quarter, that was a quarter something really changed. We had a lot of buyers coming in both before and after earnings. And then I think the big key with it was even though it gapped up 19%, buyers still kept coming in and the thing just exploded to the upside. So it is a little bit trickier to trade for earnings just because you can see that they are missing their estimates a lot of the time. You can also see that half of the time they're still gapping lower. So it's not like you're in this situation where the ticker always goes up after earnings, even though they're missing. So I would say it's a little bit of definitely a toss up for sure. As far as what I could do with it, Might be able to sell some neutral iron flies just depending on what the expected move ends up being over earnings and what the premium looks like. This is a ticker that just has so much attention on it, that it has some really high implied volatility. So because the implied volatility is really high, it's possible that we could come in and sell the at the money puts and calls and buy some adder wings for protection, and we could just trade the volatility crush. So that might be the thing to do with this one just because it's not consistently up or consistently down. Yes, there could be a big surprise where it gaps up 19%. That would be great for my long-term shares. Because ultimately what I like for this ticker is I like the weekly squeeze. I like the weekly squeeze. I like the weekly chart pattern. I like the pullback into the 34 EMA. I like the bounce. I like the rally. I like the volume coming in. I mean, I love the squeeze. So I think that ultimately, this ticker is going to trade up into 88 and then 100 after that. And that's why I've been buying the long-term shares on it. Trying to figure out how to participate in WDC and SNDK big breakouts. I can tell you that I'm a little annoyed about that because I really thought that those two were at the end of their run and they just keep going. I mean, I was hoping that I could get any kind of pullback of any sort to buy them, and that just has not been the case at all. I mean, in general, like it's just not advisable to buy tickers that just keep going up and up and up that don't have short float. Typically, when I buy something that looks like this, it's because it has high short float. It has, at least 10% short float, preferably 15, 20, 30% short float. And then if you have a ticker like that where it's going out on high volume, going into earnings, then you can usually trade a short squeeze, right? In this case, the ticker only has like 5% short float. So, um, I didn't have a good setup that I could use to trade this. So I have not been in on this move. As far as like a way to trade it now it's up even farther. I mean, when I was looking at it a week ago, I felt like it was too extended because it had already been in this massive rally. You have to keep in mind that, like, with the squeeze, the entire point of the squeeze is to buy the pullback in the direction of the trend. And so if you look at this chart, was trading higher, it hit the high, it pulled back in the direction of the trend, and this is where we had the squeeze. Do you see that these green dots shifted to white dots and red dots? That's where the squeeze occurred. That's where consolidation was. That's where the pullback was. And that was the spot to buy it. And then it broke out, it just kept breaking out, it kept breaking out. And so now at this point, it's like, what are you gonna do? I mean, there's no pullback, there's no squeeze, there's just nothing you can do. So I'm not gonna buy it at this spot. I mean, don't you guys remember like what? A week ago, people were asking how they could buy silver. It's the same thing. It's like trying to buy silver at $120. Yeah, can you do it? Yeah, you can do it, you know? You don't need my permission to do it. But is it a good idea? Not really. Not really. Do you have an edge? No, you don't have an edge. WDC, I mean, here's the thing. This one's finally starting to pull back. You could buy it at the 21 EMA, you could buy it at the 34 EMA, you could buy it at the 50 SMA. Those are going to be pullback zones that you could buy. Um, so as far as buying it right here, I mean, unless it had short float, I will buy stuff that's up a lot, but it has to have short float because when it has the short float, that's a reason that it will continue exploding to the upside when it's already up. Otherwise, you don't really have a good technical reason. Um, WDC. So this one actually has almost 10% short float, so that's at least something. Um, so that gives you more of a reason to buy it rather than something like SNDK that just doesn't. But again, the question becomes, okay, well, how do you get in with an edge? And it started to pull back. It has 3 days of pullback in a row. But yet there's just not really a good zone to buy it. There's not a squeeze. I don't see a technical way that I could get into this stock with an edge. So that is kind of just ultimately for me what it comes down to, because I would want to have an edge with my entry in order to get into a trade. Make sense? So what position will you take for earnings trade? So for iron too, I mean, I I don't know what I will end up doing there. Um, as far as an earnings trade is concerned, it it may just be the it may just be the neutral iron fly, or I may not end up doing anything for it. Looking at any long end of day trade here. Nvidia. Yeah, we can look at Nvidia. PLTR earnings, Qualcomm, MU. Let's look at MU and Qualcomm. So it's kind of in the same spot here. Yeah, so I mean, this one's the same thing where it's just one of those things where I'm not saying it's not going to go higher. It can still go higher. WDC, SNDK, MU. I'm not taking a position here where I'm saying they can't go higher. What I'm trying to say is when I get in, I would like to have an edge on my entry. And so in order to have an edge, I would like a pullback buy opportunity to give me a better entry point. And when something has just exploded, 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 there's not a good way for me to get in. I mean, yeah, you could just buy it and hope for the best, but that's just not really how I like to do things, if you know what I mean. Okay, so let's look at PLTR. So for this one, they already reported. No, it's aftermarket. I thought it was this morning. Okay. So this one was a disappointment to me. I did lose money on this one because I bought it before earnings for a short-term trade that was supposed to be a rally going into the earnings report. Um, in this case, that did not work, which is pretty abnormal for this stock. I generally have the same tickers that I will trade, like, over and over again, um, every quarter. And in this case, we had a situation where this ticker did not rally going into earnings. And so that was a pretty unique situation for this stock because if you're looking at the earnings hot zone here, what you'll see is that historically over the last 9 quarters, this stock has rallied on average about 11.67% going into earnings, okay? Now, because of that, this is a ticker that like 21 days before earnings, that's usually something that I'm gonna come in and buy, and that's what I did this quarter, and this quarter just got hammered. That's gonna happen sometimes, obviously no trade is 100%, but it is a bad sign. So, it's a bad sign for earnings because last quarter, they gapped down 7.3%, which is a little abnormal for this name. They have had a little bit of volatility this quarter. They were down 8.9%. This quarter, they were down 12.8%. So, volatility can happen, right? But when you have this 7.3% gap down, and then you also have a failure of the rally going into earnings, it just kind of puts the company in a bad position when they report because I mean you can see that pattern is happening because people are nervous, people are selling the stock before earnings. So it could be one of those things where the earnings report comes out, everything's fine, the stock skyrockets, there's no issues, and all of this was for nothing. But when I see this kind of pattern, it just gives me like a little bit of a warning sign. Um, because normally on a strong stock in a strong sector, big money is coming in and they're buying it before the earnings report because they think it's going to be good. And in this case, that's just not what's happening. So we're going into earnings on the low of the quarter. We have the market maker expected move, $14.20. The issue with that is if it moves to the downside, the expected move, um, you're gonna make a new low on the year. You're gonna break down all the way into what, like 130, which is where you have this support zone here. You have some more support down at 120. So I mean, I really wouldn't like to see that happen. Um, if you break to the upside with that expected move, at that point, you would be looking at a move up into 160, which that's really what needs to happen for this stock to recover because it has to be up above the 200 simple on the daily chart. Anytime you have a ticker below the 200 simple on the daily chart, it is bad news um, because it's a critical area of resistance and we do not want to be below that level unless you're shorting it, which I don't think you are. But as far as the weekly chart pattern is concerned, I mean, I think the weekly chart pattern still looks good. I think as long as you hold up above where you're at right now, like 145, you have that weekly squeeze. You have a little bit of a Fibonacci two-step setup here. Throw those levels on like this. That actually gives you a little bit lower area of support at 140. Um, but I think overall, the weekly chart pattern still looks okay, but we have to get through this earnings report and the stock has got to trade higher after earnings. If we break further to the downside, especially below 140, that squeeze could fire to the downside, and then we'll see some pretty big selling, I think, in this name. Where do you think the SPX is headed for the week? Yeah, we can go back and look at that. I usually do look at the end of day SPX day trades. and it is 12:39, so I'm a little bit behind on that today. But as far as, like, where it's gonna go this week in particular is unique because we have a lot of earnings reports. So, I it's not one of those weeks where it looks like we're gonna be in a solid trend one direction or another. What I'm betting on this week is volatility, because we have AMD that's reporting tomorrow, we have Amazon later in the week, we have Google later in the week. So I am not anticipating that this is going to be a specific trend, but rather I'm looking for some big moves to be had due to these earnings reports. So I like to take it one day at a time. As far as right now in this very moment, we definitely have some weakness. We have just a little bit of end of day jitters, a little bit of selling. We weren't able to get up into the 7,000 price point today in the SPX. And at this time, we are just barely breaking through. Actually, not quite yet. We're right there. How are we going to break it? S&P futures. If the S&P futures break the 7,000 price point, that's where I would expect a big flush to the downside. And at this time, we haven't had any major buying. We haven't seen the ticks up above the zero line really at all since I started talking, which was right around here. We barely had like one little positive tick up into plus 600. And ever since we came into the last hour of the trading day, we've had more selling than buying. So, I mean, to me, it looks like an end of day short. And now we're getting down into the negative 573 on the ticks. If you break through that 7,000 price point, that's where I would expect the flush to come through. But no, I didn't do an end of day trade today. Qualcomm earnings. Tried the new 0 DTE and Apple today. It drops like 40 cents and you're down 50%. So on a small move higher, I got out for a small profit. 4 hours later, it can be up 350%. Just need to take stuff and YOLO it. Oh dear. MNST looks good to me. You have QQQ puts. Thoughts on Circle. Got beaten with a stick. I'm considering it to buy. The earnings that everyone missed was FLWS. Okay, I'll check that one out. You could help with any API connection issues. Oh, thank you. It's more so a function of I am not a technology expert. Ugh. My poor husband. We work at the same company, but even if we didn't, I would still be knocking on his door all day long. Like, can you please help me with this? Thankfully, with AI, I've gotten a lot less useless and I have managed to do significantly more, um, you know, adjustments to all of the technology I have because I have like a full, TV studio and cameras and recording and all the things. So I tend to have a lot of different I tend to have a lot of different things that come up in my day-to-day life. And since we haven't had an office since 2020, it's just me here trying to figure out how to make things work until I knock on my husband's door. Please help. When there's no help, you tend to learn. Yeah, that's his response as well. TER. Let's see here. Tomorrow. This is one of the Pelosi ones, isn't it? All right, let me pull up the hot zone on this one. Looks like the S&P is just barely holding 7,000 on the S&P futures. I think this one has short float still. No, looks like it only has 3% short float now. VST and TEM are current Pelosi trades. So, I mean, overall, stock looks great. It's gapped up 2 quarters in a row. Big gaps, 17.8%, 16.8%. Looking very good. You just don't know that that trend is gonna continue with the next earnings report, obviously. So, I do like the stock. I like the pattern. I think that if you wanna trade it, sell in and put credit spread could make sense. I don't usually trade a lot of earnings reports on Monday. Usually Tuesday is definitely a little bit better, but Wednesday and Thursday are gonna be the better options just because those are the days where you can actually see the volatility crush coming through a lot better. So just for example, if you sell put credit spreads on this one today, um, if it stays right around the same strikes and doesn't really move a lot, you might be able to take a small profit on it. Um, but it's not something that you're gonna be able to take a max profit on overnight when you're going from Monday into Tuesday due to the fact that there are still many more days left in the week before those options are going to expire. So I don't typically do a lot of earnings trades on a Monday for that reason, because when I'm coming in and I'm selling premium, the whole point of it is so that the premium will decay quickly. Now, if you get a situation where this stock gaps up 20%, it's not going to matter that there's still 4 days left on the options because they're going to be so far out of the money um, that you would still be able to take a profit. So I feel like with that one, just because of the overall pattern, if you wanted to make an aggressive bullish bet on it, doing something like just selling the put credit spread could work. Um, let's look at VST. So that one is the 1 tequila, 2 tequila, 3 tequila setup for sure. When you have a ticker that has gapped down a couple quarters in a row and then you're coming into earnings basically on the low of the quarter, it doesn't need that much bad news before it just rolls over and completely dies. So I would say that that one is more than likely going to trade lower because it's underneath all of this resistance. It's already starting to fall. You're in that time frame where you're in that pre-earnings time frame. Um, so that to me looks like it is headed for lower prices. Let's look at Nvidia and look at Circle. So Nvidia is pulling back today, but then you also have some other semis like AMD is rallying. So it's not like it's not all of the semiconductors. Like last week, the semis were getting hammered, right? So, um, at least on this candle right here, I think Friday, yeah, on Friday. Um, so we have some up, some down. That's kind of evening out SMH. I think with Nvidia overall, it's just been in consolidation. I think Nvidia is consolidating. I think it's getting ready for the next big move. As an Nvidia shareholder, I would love to see that move fire off to the upside. And I think from a technical standpoint, we're still set up to see that happen just because even though it is down almost 3% today, we're still up above all of these support zones. We do have earnings coming up. We're in that pre-earnings time frame. I will say that that week of February that NVIDIA earnings falls into is kind of historically a bearish week, so we do have that to consider. But I think as of right now, NVIDIA is still consolidating. It's in this daily squeeze. It's holding up above support. If it broke down below, I mean, really where it is right now, like below 184, I would probably start changing my mind, but really it's 180. I would say that would be the big break. Um, so I think it's okay for right now. Let's see if it can bounce tomorrow. Let me look at these lower time frame charts. Definitely not looking good. I mean, it's getting hit with some high volume selling. So, this weekly squeeze on Nvidia, I mean, I still think that it has the potential to carry this stock. Oh, wrong tool. So I think that it still has the potential to carry this stock up into 225, 230, 240. I don't love that the squeeze is turning orange. The orange squeezes are the ones that can kick you in the teeth and go the wrong direction. So, historically, the squeeze fires in the direction of the trend, and the trend on NVIDIA is up. However, if you look at the squeeze down here, we have the green dots. It's not in a squeeze. White dots are in a squeeze. Red dots are in a squeeze. The orange dot, you see this one orange dot right here? That was like the red flag waving. That was a warning. And you can see that that squeeze did initially fire to the downside. It took you all the way down into $85 a share before it flipped around and just had this massive slingshot move to the upside. So I'm starting to see these orange dots, and it's kind of like, ooh, that's not a great sign. It's not really what I want to see. I'm still bullish Nvidia, and I still think it can recover from here, but there's some cracks forming. I don't love that it's down 3%. I don't love the high volume selling. If it breaks through 185, which it just did, it's also another thing I don't really love. Um, Definitely below 180, I would change my mind. I would say I'm not gonna buy this one right now, even though it is typically one that you can buy before earnings. If you look at the earnings hot zone data, what you can see with NVIDIA is that over the last 8 quarters, on average, it's traded higher by 9.24% in the 21 bars before earnings. That's a really big move. I mean, if you can see that a ticker typically is up 10% during that time frame, like, it's generally a really good time to buy it, right? Technicals right now aren't super promising, but the overall statistics, I think, historically still are. So let's just give it another day or two. Let's see how the market reacts to AMD earnings tomorrow. I think that's going to be really important. Um, and then Broadcom as well. So Broadcom is going to be reporting on March 4th. Again, this is during that time frame in the market. Like those last 2 weeks of February are historically pullback times, especially if you pay attention to Stock Traders Almanac. You can read about it there. I don't love the way that Broadcom this is kind of doing like a PLTR move. We went over PLTR and I talked about the fact that I lost money on it in January because I tried to buy it for a rally going into earnings because historically it does trade higher going into earnings, but this quarter it didn't work. And I think a lot of the reason why it didn't work is because last quarter it went into earnings on a new high. It gapped down 7.3%. And at this point, it has reversed course. So Broadcom looks pretty much the same. Broadcom went into earnings on the new high. It ended up having just the expectations were just too high compared to what it actually did. So it was down like 6.5%. And then now at this juncture, it's underneath all of these resistance zones. So don't love that. All right, let me see if there's any other requests that I missed. Yeah, it's an NVIDIA trap. Thanks for your help. Of course. That's what I'm here for. I got to make myself useful in some way. Okay, let's see. Circle. Okay. So this is one of those tickers that can be fun when there's a short squeeze, but when it has shifted into a downward trend and downward pattern, it's just not looking so hot. So the short squeezes are going to work the best when you have a bullish trend, when you have a stock that's talked about in the media a lot. Anything that gets a lot of media coverage, causes more people to buy it. And then there's more volume that comes in, and the incoming volume is what helps the short squeeze pop. So there's really two different ways to look at something like this. If you are looking at this and you're saying, "Hey, I like the company, I like the stock, I want to buy it on a long-term basis because it's down," and you have done your research and that's something you want to buy, then that's fine. For me, looking at it as a trader on a short-term basis, I don't see a good opportunity in it unless I shorted it before the earnings report. Because this was a stock that I was trading earlier, well, not this year, but last year when it had this massive rally right here, this high volume rally, because there was a lot of short float in the name. I didn't buy the shares in it. I was just trading the short squeeze. Right now, there's 10% short float, but it's like down on the dead lows going into earnings. And actually, the setup that I see now that I'm looking at this graph is, you see how up here it says pre-earnings 21-day average. It's down 28% on average before earnings. Yikes. That is bad news. Now, you have to keep in mind that this stock has only reported earnings twice. So it's not like these stats are covering years of data. However, when you have a name like this that is so speculative, so new, yeah, you have that 10% short float. You have a gap down 4.5% last quarter. And then the quarter before that, you had a gap up, but this is the worst part. You had a 15% gap up, but that gap did not hold. And you just had selling, 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 selling. Then it tried to recover, selling, 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 selling. So I would actually short this one before earnings. Just because it looks to me like the kind of name where people are going to say, "Oh my gosh, should I really hold this going into the earnings report?" Ooh. So if you want to buy the shares long term, you may get a better opportunity, even though it's down and it's even though it's down and it's been down, you might actually get an even better opportunity because you can see that people are bailing on this before that earnings report, and the earnings report is on the 25th. So, let me actually look at the puts on that one. NVIDIA buyers are trying to come in. S&P is just basically holding. Does anybody know what time PLTR is going to report earnings? So if I'm gonna short something before earnings, I'm generally gonna go into the option series in which they're reporting, which is gonna be the 27th of February. Um, and then, you can get generally like Delta 70s are gonna be, deeper in the money alerts. Oh no, the market's gonna close in 4 seconds. Thought I was gonna have time to get this on. I'm a little too slow today, apparently. Um, so anyways, you could do like a Delta 70 that would be a deep in the money with something like this that looks like it's just gonna roll over and die. I wouldn't mind doing like a Delta 60. That would be at the 64 strike. Um, or like a Delta 50 at the 60 strike. That would be something that could work as well. And then those are just gonna be cheaper. So I think either one of those are fine, but I mean, I like this idea overall. Let me just take a screenshot of this chart. I like to I like to get some bearish ideas on going into February, especially the second half of February that can be a little bit dicey. Where is John talking after the close? I don't know. Where is John talking after the close? Maybe right here. Oh, so what time is that at? Right now? Now-ish. Okay, John. Well, let me know when you're ready. Prediction for PLTR earnings. PLTR earnings are at 4:15. Will you be live on Pain? I didn't get my confirmation yet, but I should be doing Fox Business on Friday. They don't confirm you until that morning because, they have to see what breaking news is going on and all that kind of stuff. So, um yeah, I'll be in the trading room tomorrow. After that, I'm going to New York Wednesday, Thursday, and Friday. But I will be back the week after that. So it looks like John is stepping into the trading room. So I'm going to go ahead and log off. But thank you, everybody, for joining me for the close. I'll let you know if I update any of my positions. Hopefully, I'll get the API alerts working. And then that way I can just use an iPad or something while I'm traveling. But it's going to be a new test. So thank you, everyone. I will see you tomorrow. And then for those of you that are on the live stream, yeah, I had to log off of the trading room because I guess John was supposed to be going in there after the close, which is a little unusual because we don't do a lot of things right after the close. Um, so I don't know. I guess I missed whatever that session was about. But if you would like to join us in the trading room, I'll go ahead and post an alert. Normally, I do this live stream session on Fridays, but since I'm going to New York this week, I went ahead and did it today. But here's the link that I posted in the chat. It's just basically a link to learn more about the trading room, and you can sign up if you want. With a trial quarterly membership. If you sign up with a quarterly membership, then that's when you get my grid with my candles. Candles, Turbo Visio, all that good stuff. So I hope that everybody has a great rest of your day and rest of your week. And I'll be back to doing the live streams next Friday. Bye.